Okay, now the first line says drawing support and resistance, drawing supply and demand. Now, most people have problems drawing out supply and demand, identifying which supply and demand zone is going to work. Stuff like that. They really don't know. They don't know if it's going to work, if it's not going to work, blah blah blah, this and that. Okay. Now, first things first, you should all know that in drawing supply and demand, let me look for another BTC pair. Okay, let me still use this one. In drawing supply and demand, what do you need to look for? You need to look for the market trend. That's first in the structure, market structure. What is the market structure? Is it bullish? Is it bearish? Is it an uptrend or is it a downtrend? Okay. Now, what do you want to do in an uptrend? Definitely you want to buy in an uptrend, and then you want to sell in a downtrend. That's what you want to do, basically. That's what every trader wants to do, right? You want to buy in an uptrend, and then when it's in a downtrend, you want to sell. Though there are some times that you can sell in an uptrend and you can buy in a downtrend. Though we won't be covering those today. We are just looking at how to, draw your supply and demand and the likes. So let me delete everything I have here right now. Okay, now looking at this market situation right now over here, we don't want to look to the left so much. We just need a little bit of price action that has happened, okay, which is that area that I've circled over there. And clearly, what do we have? It is bearish, right? It is bearish, very, very bearish. We can't say this is bullish. No, it's not bullish. So when the market structure is bearish, you've gotten what? You've gotten one out of your problems, right, that you want to solve. Remember, this is a downtrend because first things first, you can see it clearly, okay, without even using anything. It's a downtrend. You are not using any line, but looking at it with your eyes is a downtrend. Then how do you identify a downtrend again? With the highs and lows, right? Giving you a series of highs and lows like this. Look at this high over here. Look at this low. Look at this high. Look at this low. Look at this high. Look at this low. So this is what we're expecting till further notice, okay? Till further notice. This is the chart of BTC USD. This is Bitcoin. Now you've gotten the market structure right. Fine. Now, how do you identify the demand and supply? Demand and supply, every trader in the markets wants to buy low, sell high, okay? Though there are some strategies that allow you to buy high and buy high and sell low. Yeah, there are some strategies that allow you to do that. But as a demand and supply trader, you want to buy exactly when people are demanding for that price to be bought, and then you want to be selling exactly at a supply zone where the suppliers are demanding to sell off. You understand? So it means basically we want to buy low. You want to buy at the lowest point of the market, right? And then you want to sell at the highest price of the market, at least the reasonable, most recent highest price of the market. You understand? So now, how do you identify these demand and supply zones? First things first, you look at the trend, which is the structure. Then secondly, you look for where market has broken a previous low or a previous high. Okay, now we're looking for supply zones. It means we're looking for more zones to sell from, more higher zones to sell from. So you're looking for a higher zone you want to sell from. Then how do you get this higher zone? First of all, looking for a supply zone first. Looking for a supply zone, you want to draw the supply zone at the correct supply, right, at the correct price. So now, how do you identify that, okay, this place is a supply zone, this place is a demand zone? Now, the first thing you need to look is break of structure, okay, which is break of a previous low or previous high. Previous low or previous high. Okay, let me stop presenting and then I will start presenting again. All right, so I started presenting right now. I started presenting again, so my screen should be better and clearer now. So you wait for a what break of structure of a previous low or a previous high. Now we are in a downtrend and we want to look for supply zone. So we are looking for break of what's a previous low. Okay. So this is a previous low. After this uptrend, you can see markets broke this low. That is the first breakout. You can call it a breakout, but we call it break of structure. Okay. Now you can see this is a break of structure. Now before this break of structure, how do you now get the supply zone? The supply zone is the candle or the most colored candle, which is the green candle before the break of structure. Okay. You can also use this colored candle now. Now this is a colored candle, right? Before the break of structure. But why am I not using this colored candle as a supply zone? This is where your confluence comes in, and you want to be sure of the supply zone you are using now. Okay. This is where your confluence comes in. Now, let me add one confluence for you, which is the Fibonacci. Now, looking at Fibonacci here, how do you use a Fibonacci? If it's in a downtrend, you draw it from what's the highest point to the lowest point, if I'm correct. Yeah. But now, looking at this, looking at this supply zone over here. Looking at the supply zone over here, when we draw a Fibonacci over it, from this supply zone right to these lowest points that cause the break of structure. Yeah, now, exactly on this green candle, what can you see? The first supply zone, which is this one, what can you see? You can see market is exactly on 0.5 Fibonacci level, okay? 0.5 Fibonacci level. But now remember what we said, we want to buy low, sell high, and then you might not really want to sell exactly at equilibrium. You want to still sell at a higher price, which is over here. You can see 0.7, and that is where market rejected immediately. You can see 0.7 or 0.6, but most of the time I always use 0.7 because it's kind of the most premium. It's like the highest price ever you can get. Okay, so that's 0.7. You can see what happened. Market touched the supply zone and then sold off immediately. See where we are right now. So you can see what I did. We add two supply zones, this one here and then the extreme one. So to confirm which supply zone to use, you can use what the Fibonacci. You draw it from the highest points to the lowest points. You can see this is the lowest point after the break of structure. Okay, after the break of structure, and then you can see what's happened. So we've confirmed that this supply zone is the one you want to use and not this one. Okay, that supply zone is your valid supply zone you want to use. Okay, now you can see it's not so difficult like that. So then what will be the next supply zone over here? It will be this one, because market has broke the low right now. Market has broken this low, right? And then the next supply will be this green candle over here. Yes, this green candle over there. So what you'll be expecting right now, you're expecting markets to retrace back into this supply zone and then sell off again. But looking at this, it looks far. You understand? It looks so far, and then market might not want to do this. Okay, so we are still going to break down inside this price action that we have here. Now we also have this green candle over here, but you can see what happened. I wouldn't say this is a valid supply zone until there's a break of a structure. So let's go to the daily time frame now to check. Yeah, so I would love to say this is a supply zone, valid supply zone. Why? Because there's a nice break of structure over there, clear break of structure. There's a clear break of structure here, and there's another break of structure here. So now looking at this break of structure here, I can say yes, this is a valid supply zone. Market will react from. Okay, now remember the weekly time frame is bearish. If you can remember, this was the first weekly zone. That was the first weekly zone. Then this is the next weekly zone. Now this is the next weekly zone again, but look at what is happening right now. This is a daily zone now. Now we are moving into the daily time frame. Look at what is happening. Price didn't enter into the supply zone, and you're like, okay, so what do I do if market doesn't enter into my supply zone? You know, when you are trading demand and supply, what are you expecting? You're expecting that, okay, market will get to the supply zone and then to sell off. Or whenever you're trading demand, you expect that market would, or price would get to the demand zone and then you want to buy. Okay, so what you do is you wait again for another structure to form. Now you can see here, market in. I'm coming. I have a little requests. Okay, and you can see here now, this price didn't, you know, this is the supply zone, right? This is the extreme supply zone we're expecting, but look at how price did now. Look at how price did. Just got to half of it and then started selling off. But you don't want to wait so much, because definitely as a trader, you shouldn't be waiting for 2 weeks, 3 weeks before you can get a trade. No, maximum you can wait is like 1 day, 2 days before you can get a trade. But look at what is happening right now. We would wait for a very long time. So how can we participate in this market's movement, market reaction? Remember, we want to sell, and then we are only looking for selling opportunities. We want to sell, and then we're looking for selling opportunities only. We don't want to look for buys, okay? We don't want to look for buys at all. Now, let's, oh, sorry, I was on BTC. Yeah. Now let's participate in this current price action to, you know, take sales, to take trades, not sales, to take trades and move on. Okay, now look at what market has done here. Created this sort of range for a lot of days. Range for how many days? Imagine 68 days. So it ranged for a lot of days, and now market has not touched the supply zone. What do we want to do now? Still want to sell, right? Still want to sell because we are bearish on the weekly time frame, and then looking at this daily after this range is also still looking very bearish. Still looking very, very bearish. Okay, break of structure and how to identify it. Now let me quickly give a rough sketch. This is an uptrend, right? An uptrend, an uptrend, an uptrend. Nice. Now, where is the break of structure? Okay, let me draw a downtrend soon. How will you identify the break of structure? Like I said, don't mind this one. Yeah. Like I said, you have to wait for a previous high or low to be broken. Now, for uptrend, you have to wait for a high to be broken, like this. That is the break of structure, because we got a breakout of this previous high to give us a new high. Okay, we got a breakout of a previous high, right, to give us a new high. You understand the gist now? Broke this previous high, give us a new high. So that is the break of structure. Then second break of structure would be here. Sorry about that. Second break of structure would be here, right? Then next break of structure would be here, right? Yeah, you get the gist now. Breaking previous highs to give us new highs. That is break of structure. And for selling opportunities too, and then where will be the demand? It will be the colored candle over here that was formed before the break of structure. So why are we using the colored candle? Yes, why are we using the colored candle? Or why are we using the candle before the O movement? Why are we using that? That is because around that price or on that candle, that was where there was a lot of volume. Okay, that was the last selling candle before the break of structure. So we believe there was a lot of money put there. You know, when the price of the chart moves up and down, we believe that they are either injecting money or withdrawing money. You understand? So there was a lot of movements around here that caused a break of structure. You understand? So there must have been a reason for a break of structure, which is the aggressive movement. So we believe that once there is an aggressive movement to give us a break of structure, market should at least at all instances should what? Should mitigate, okay? Should go back to that level and then buy from there again. You understand? Because it means that there's a lot of orders that were here, that were opened, went up. So we expect that market will mitigate. What is the meaning of mitigate? Like to cover up something, like to balance up something. Okay, so we don't just want to leave the whole money flowing. We have to balance it a little bit with the sellers. And then once it gets to that zone again, we continue buying again. And then the cycle continues. So after a breakout, where is this demand zone again? It will be somewhere here. You understand? So for supply to or for sell or for selling opportunities or a downtrend, on a downtrend, you want to look for a supply zone, right? You want to look for a supply zone. So you also wait for break of a previous low, right? That is the break of structure. Let me just label this break of structure here and break of structure here. Yeah, break of previous low to give us a new low. This is the new low, right? And then once that new low has also been broken like this, with this aggressive move, what has happened? There's already a supply zone that has formed over here, okay? And we expect that market should at least come back to mitigate it. If it doesn't, at least it should mitigate. You understand? So that is the idea. That is the idea behind demand and supply. Breaking of previous highs and lows to give us a supply or demand zone. And then we expect it to continue like that. So that is the idea behind it. And I believe I've answered this man's question right now. Don't worry, it will be recorded. It is recorded. It is recorded. Okay. So back to the charts. Yes, back to the charts. So now you get the idea now. Now look at the charts. You can see on the on the charts, it won't be so easy like this. It won't be just this one kind of movement. Let's look at the chart and see what we have. You can see now we have this low here. Price broke out from this low over here, broke out of this low. This was the zone that caused the breakout. Remember, we talked about this breakout and then we used Fibonacci to filter out and then use this supply. Okay, so using Fibonacci, don't worry, it's recorded. You can watch it again. And then where is the next supply zone? We have this breakout here of this low. You can see that's the lowest point on the chart. Got this breakout here, and then this is the extreme zone. You can also use this supply zone here. But now look at what has happened again. There's another break of structure over here. So I don't want to be interested in all these supply zones or all these supply zones over here. Let me delete that. So I want to be interested in only this supply zone because this is the current market position, this is the current market price, and this is what I want to do with it. Okay, now where I stopped was looking at the supply zone. Now you can see market didn't touch the supply zone, so we have to continue following the structure. We have to enter the market, we have to be active, we have to sell. So what do we have now? We have another supply zone over here. Yeah, we have another supply zone over here. After we got break of this low, the break of this low, see, and the break of this low. So it's broke out from multiple lows. So that is the supply zone over here. But look at what market is doing again. Look at how market is doing now. Market is not still mitigating our supply zone. So what is the solution to this? You can then move to another time frame. Okay. So we are looking at how to identify demand and supply. So I shouldn't be explaining most time frame analysis here, but it's still part of it. Now you can refine all the zones you've drawn. Now you've left that side. Now this is the current market price, right? This is the current market price. You want to sell off, you want to engage also in the markets. After you break up this low, right here, beautifully here. In the last class or the next class, should it be next class or last class? Now we'll be talking about why BTC is dropping and the reason for the inflation and how it is affecting BTC and where BTC is headed. So looking at the supply zone, you can see market didn't touch that supply zone, but it's a very active and valid supply zone. You understand now? Then what is the next supply zone? We have multiple break of structures here. We have a break of this low from here. And then this is the supply zone. Yeah, So you can see what's happened. Market touched supply zone, sold off immediately. And where is the next? What's the next thing we want to do right now? Now you can see it's not so clear again. We can move to the last time frame, which is the 1 hour time frame. Okay, so that's the last time frame I always use for my analysis and identifying the zones. Yeah, you can see touched it and it dropped nicely. So this one was a beautiful setup. I sent this one to my student and then look at what happened. Sold off immediately. Now this is the current market price, and then we want to still look for more opportunities to sell. So yesterday also I found out another supply zone over here. You can see there was a break of structure here. There's another supply zone over here. Yeah, break of structure, you can see broke that low, and then this was my supply zone over here. Yeah, that candle, and you can see what's happened. But unfortunately it's happened during the midnights. Okay, you can see it happened 1 o'clock, 6 o'clock in the morning. So at this time I was still off the chart, I was not online yet, and you can see how we dropped massively. Okay, remember where we were coming from, the weekly time frame. So what do you need to do to draw out the supply and demand zones? All you need is not so hard. Check the market structure. Is it bullish or bearish? You should know that if it is bullish, you want to look for only buys, and then if it is bearish, you want to look for only sells. So if it is bullish, then you look for demand zones. If it is bearish, you look for supply zones. And now market is bearish, and then we're still looking for supply zones. Okay, now I'm still interested in looking for supply zones again because I still want to sell. Now where is another break of structure again? We have this break of this low over here. Yes, and then where is this supply zone that was formed? Is here, right? Yeah, so I'll be looking to sell from that supply zone again. Okay, then over here I'll be looking for sell entries over there. I'm looking for sell entries, sell confirmations over there. Okay, so this is pure demand and supply, identifying it with break of structures. Okay, break of structure below over there. And then when you are following the flow, you wouldn't always get on the wrong side of the charts or of the market price. You understand? Now this is it. Now though there are some other confirmations like Fibonacci or liquidity which you can also use. So next we'll be talking about liquidity. Okay, but let me see the next topic, what it says. The next one says, yeah, how to identify liquidity. So how do you identify liquidity? That is very, very important. How do you identify liquidity? How do you know this zone is an area of liquidity? Let me check if anyone has any questions. Okay, so I believe I've answered this question on break of structure. And then I'm moving to how to identify liquidity. Then I'll stop there. Then tomorrow we'll continue from Asian session liquidity and support and resistance liquidity, all as confluence, you understand? So that you are always looking for more confirmations to look for, to take a supply zone as valid or to take a demand zone as invalid or valid using liquidity. Now, first of all, how do you identify liquidity? How to identify liquidity? That is where we're going to be stopping for today, because I don't want this class to be a very long class. So I'll be stopping on how to identify liquidity. Now, how do you know liquidity is building? How do you know that, okay, this zone is a zone of liquidity, this zone, liquidity is there, and the likes? So first of all, what is liquidity? For some might not know. So what is liquidity? Liquidity is money. Okay, liquidity is money. In Forex, liquidity is money. And what is money? Yeah, what is money? Money can be everybody's stop loss, and money can also be yeah, let me just stop there. Money can be everybody's stop loss. Okay, so if you can know what is money, money is everybody's stop loss or take profits. and then money is also what? Liquidity is also money. Liquidity is stop loss. So what do I mean by this? Liquidity is an area where there's a lot of money and where you feel price will head to most of the time. Most of the time, price will always head to an area of liquidity to take liquidity. Remember, I said liquidity is money. So to take money and then, continue moving. Take liquidity, take money, and then continue moving like that. Okay? So that is liquidity for you. Liquidity is an area of the market where there's a lot of money. So how do you know there's a lot of money inside a particular zone? And then how to use it to your advantage. Okay? So I'll be talking about how to identify them, which is sometimes you can use the range like this. So this is liquidity in the ranging markets. Okay, this is a ranging market like this. Definitely, where is the liquidity going to be? It's definitely going to be inside this range like this. Why is liquidity inside this range? Because there's a lot of buyers and sellers. You can see we have a lot of buyers, we have a lot of sellers here, and then we have a lot of buyers here. And then if there's a lot of buyers and sellers, what does that mean? It also means a lot of buyers and sellers are putting their money inside these zones. Okay, that is why I said liquidity is money. Liquidity is money. Now there's a lot of money at the top here, there's a lot of money at the bottom here, and then most of the times, what does the market maker always do? Always takes out liquidity and then moves. Always takes out liquidity, takes out liquidity, takes out liquidity, right? And then what? And then it moves either to the upside or to the downside. Now you get the gist now. You get the gist now. So that is liquidity for you. Liquidity is where there's a lot of money in the market. Now, how do you know there's a lot of money inside the ranging market? You will see it clearly when there's a range, when there is support and resistance. Yeah. So when market is moving in a series of support and resistance, it's not moving in a specific direction, just moving up and down, to and fro, something like this in a range. Yeah, more like this. Yeah, you can see there's a range here. It's not moving in an uptrend or downtrend, it's just ranging. So at this top, there's liquidity. At this bottom, there's also what? Liquidity. You understand? So, and we believe that markets would, or price or market makers would always want to grab liquidity and then move either in their direction or against their direction. Okay? So looking at these points over here, there's a lot of buyers here. It means when you are buying, your stop loss is going to be where? Your stop loss is going to be somewhere here, right? Below the buying zone. Below the buying zone like that. And then you can see what's happened over there. So that is just a small example of liquidity grab. Okay, so you can see there's a support here. Let me draw out, okay. Let me just draw out the support alone. Yes, now you can see there's a support over here. So this is support, right? And then what is happening here? There's a lot of buyers here. A lot of people are buying. A lot of people are buying. You can see that. So there's a lot of money here. And then what does the market maker want to do? Market maker wants to always takes out everybody's money before moving in the buying direction. You understand? So you can see what's happened there. It's moved a little bit up before, then selling again. You understand? So that is just the little concept of liquidity. Market always wants to take out everybody's stop loss, though it doesn't always happen. You understand? Because if it always happens every time, then so not every time, but you can add this as a confluence. Okay, as a confluence. So tomorrow we're talking about adding them as confluence, adding liquidity as confluence with your demand and supply. Okay, but now we're just looking at how to identify liquidity. So now you've identified liquidity because there's a lot of buying pressure over here. You can see. Okay, so let's look for liquidity with selling pressure also. Let's look for resistance. Yeah, so you can see what's happened over here. So much selling, and see what happened. It's just spike your stop loss, sell a little bit, and then continue going again. So it always grabs liquidity either to the upside or to the downside. I'm still looking for better examples too. Yeah, now look at this over here. Let me go back a little bit. Okay, let me go back here. You can see there's a lot of selling activities here. There's a lot of buying activities here. You can see what's happened. Definitely everybody wants to sell at resistance, because resistance is an area that pushes the market down, and then support is also an area that pushes the market up. But look at what's happened. This is the resistance area, right? See what's happened over here. Grab liquidity, took them out. Same thing over here too, for the demand or the support rather. You can see what's happened. Took everyone's stop loss, grabbed the liquidity, and then went. Okay, so that is the idea about liquidity grab and how to identify liquidity. So you identify liquidity by looking at zones that you can see that there's a lot of, you know, trading activities ongoing over there. Like this, you can call this an area of resistance, but there's still an area of resistance over here also. See, so like I said, it doesn't always happen every time. Like looking at this resistance now, there was no liquidity grab of any such or sorts over here, right? There was no liquidity grab. So it won't always happen every time, because if it always happens every time, definitely it wouldn't make sense. You know, the market is designed in some specific ways. Yeah, so that's a support zone. So looking at that also, you can see what's happened now. You'll be looking to buy here. TP will be there, right? And then your stop loss will definitely be somewhere here. You can see what's happened. So liquidity grab is very, very real. Okay, it happens most of the times. Now, how can we take a trade when there's liquidity? Yeah, I'll be explaining that tomorrow, how to take trades when you are seeing liquidity. Now, after seeing liquidity, what do you want to do? Do you still want to trade in a liquidity zone? No, right? You don't want to trade in a liquidity zone, because now that you've known about liquidity and liquidity grabs, you know that whenever there's a lot of, you know, movements like this, market makers will always go the opposite direction. So what do you want to do? Is it that you want to still buy, or you want to sell, or you don't want to do anything? We'll be talking about that tomorrow using demand and supply. Okay, so that is the difference between demand and supply and support and resistance. Now you can see this is a clean support zone, right? It's a support zone over there. Support zone, right? Resistance, right? This is a resistance zone. But what's happening with support and resistance now? Support and resistance are zones that create liquidity, while demand and supply zones are zones that take out the liquidity. Okay, supply and demand, you can see taking out the liquidity, but supply zone taking out liquidity, but support and resistance creates liquidity. So you get the gist now, you get the whole idea now. Support and resistance creates liquidity, supply and demand takes the liquidity. Remember, this doesn't happen every time. That is why you might not really be seeing it in the markets every now and then, but you know, you just want to use it as your confluence, when you want to take trade. Okay, when you want to take trade, that okay, I'm seeing a liquidity zone, then it means it's a very good time to trade, right? Or is a good confirmation for taking a buy or a sell. Okay, we'll be talking about that tomorrow. Now, that is one way of identifying liquidity, right? Then what is the other way in identifying liquidity? Hey, yes, you can identify liquidity also in a trending market, but this one is not really common, but is also very important. Yeah, you can see sometimes, not every time. You know, these breakout zones are areas of liquidity. That's why it breaks out most of the time aggressively, breaks out aggressively, because market is grabbing liquidities over here. Okay, and then for supply zone, also, you know, area of liquidity. So we can only use trend lines to identify this kind of liquidity. Yeah, so that's the highs and the lows, right? What I just did now, taking the highs and the lows, right? These are the highs and the lows. Now, what about trend line liquidity? Trend line liquidity. So this is also trend line liquidity over here. trend line liquidity. Now, where is trend line liquidity? Still the same uptrend, like I said, trend line liquidity, right? Then this is a downtrend, right? So literally everywhere in the market there's liquidity. So you have to be careful and watchful so that you won't be the liquidity. If you can't spot the liquidity, then you might be the liquidity. Okay, so now where's the liquidity on this uptrend and this downtrend? It is here, over here. Can see? Yeah, so you can see there's a lot of buying pressure here. Market touches that zone, bounces up. Market touches the zone, bounces up, touches the zone, bounces up, touches the zone, bounces up. Remember, I was talking about demand and support and resistance. Now this is a trend line support. Okay, so we also believe that market should do this: grab liquidity, take out everybody's stop loss, move in their direction. Okay, so same thing here also. Same thing here also. Where is the liquidity? It is here, right? Over there. So that's like resistance, liquidity, and then we believe that this is creating resistance, and then people are selling from there, and then when market wants to go back, to grab the liquidity either to the upside or to the downside. You get the ideology now. So that is how to identify liquidity in a trending market. Okay, so we've talked about how to identify liquidity in a ranging market, how to identify liquidity in a trending market. Okay, so now after there are some market conditions that always gives you difficult trading times, like let me say sometimes you are looking for a market trend now, and then it's difficult to identify the trend. Okay, let's look for a random pair over here. Let's look for a random pair. Okay, this one is still bearish. Let's say this is bearish, right? So what am I trying to say now? This pair is not giving me what I want to see. But there are some times that you want to draw out your supply and demand. Now it's still easy to draw supply and demand here, right? Because now it's bullish, then it's shifting bearish. So you know that you want to be looking for sales. There are some times that, let's look at CAD CHF. There are some crazy pairs like that. Yeah, that won't give you a smooth market direction. Smooth market direction. Okay, let's check CAD JPY. Okay, this one is still giving smooth market direction because it's bearish, and then you just want to draw out your supply and demand zones nicely. You can see after this break of structure, so it becomes part of you, and you can easily spot demand and supply zones after you see it. Now, yeah, what I was trying to explain was there are sometimes to be ranging. The market will be ranging. So what do you want to do in a ranging market? Do you want to buy at a demand, or you want to sell? Let's look at BTC. Yeah, like this now, for example. Yeah, look at this one. Sometimes you might not want to wait. Okay, but the best thing is actually to wait, because I want to be going deep into trading inside ranges here. Trading inside, there are specific ways to trade inside ranges with enough confirmation and confluence, without, not all the times, but without waiting for the extreme supply and demand, because now you are inside the trading range, and then you want to manage trades accordingly. So the best thing to do is look for area of demand and supply, and then areas of liquidity. That will help you very, very much. But unlike this, you can see it's nicely trending to the downside. So you only want to look for sales. Even if you are looking for buys, like I said, there are sometimes you can look for buys inside a downtrend, but I'll be covering that over here. So these are the little things you need. You don't need to know everything. You don't need to master everything. Just simplicity is okay. Know how to identify demand and supply. Know how to use liquidity as confluence, and then tomorrow we'll be looking at Asian session liquidity and how to use liquidity as confluence. Okay, now some people might ask that, is this not a demand zone here? Okay, so we have 52 minutes up already. Let me check how many minutes. Okay, 40 minutes. So I don't want this to be too long. We'll be stopping soon. So start asking your questions. Start dropping your questions over here. Okay, some people are raising up their hands. I don't know if they have questions. But if you have questions, you can just type them. Yeah, so some people might be asking that, is this not a demand zone? Look at it, it's broke structure, is this, it did that. Yes, it is a demand zone. And this type of demand zone, because this is a first break of structure over here, right? It's broke that high. We won't call it break of structure, it will be change of character. Why is it a change of character? Because you can see it's a very strong downtrend, and then this is the first break of structure to the upside after a very strong downtrend. It means it is a change of character. What does change of character mean? It is trying to signify that this trend might want to start changing from a downtrend to an uptrend, okay? Because it broke this high. You know, normally the trend is meant to continue like this. You just continue selling, 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 right? But when there's a breakout, first breakout like this, we don't call it a break of structure again. We call it a change of character, because there's high probability that it is the character, or it is this breakout that will cause the change of the trend from a downtrend to an uptrend. You understand? That's why it's called change of character. So now we can go down to the 1 hour time frame to refine this well. Yeah, that is the demand zone on the 1 hour time frame. You can see nice touch on this supply zone, dropped aggressively. Now there's high probability because now there's a change of character. You can see it broke all these highs. It's fat, it's broke, it did a lot. So there is high probability. We don't know yet, we can't say. Okay, so using all our confluences with liquidity and then Asian session liquidity. Okay, so in today's video we've learned about, in today's lessons we've learned about liquidity in a ranging market, which is the support and resistance, liquidity in a trending market, which is the trend line liquidity, and then also liquidity with the highs and the lows. Okay, now, okay, somebody's asking a question. So now we are seeing something different now. Okay, this is trying to break structure after a very strong downtrend. So that is the change of character, but we don't know, does this mean an uptrend is about to begin? It doesn't mean that yet. Okay, we still have to wait for confirmation inside here, which are the confluences, and also confirmation inside here, which will be the entry criteria confirmation. Okay, so someone is asking a question over here, how to identify order block. Okay, what is the best time frame to determine a solid demand or supply level? There is no time frame that is the best. Okay, for me, I'm a day trader, so I use 1 hour, 4 hours. You get. So for you, if you are a swing trader, definitely you'll be using the weekly and the daily. You understand? Then if you are a scalper, you'll be using 30 minutes and then 15 minutes. You understand my point now? So it's not about best, you understand? It's about the type of trader you are, the type of risk taker you are. If you are a person that trades, at least you know the meaning of a scalper, a day trader, a position trader, or a swinger. You understand? So a swinger and a position trader. So there's no time frame that is the best. It should only be the best for your type of trader that you are. Then someone says, how to identify order block. Now, some people say order block, demand and supply, blah, 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 blah. Now, order block is a little bit more complicated than demand and supply. That is one. Then two, order block, supply and demand is easy to understand. Okay, now you can see we have just this break of structure, and then we've taken that as our supply zone and the like. Though sometimes you can say this is an order block. Okay, this green candle over here, you can see that is the order block candle. And when you're trading order block, like I said, other block is a little bit difficult than supply and demand. You also be looking at breaker blocks. Where is the breaker block over here? Let's go back to yeah, this is a breaker block over here. You can see now. You can see now this is a breaker block over here. Now you can see it's a little bit complicated. Okay, now this is a breaker block here. This is a demand zone here. How do you know which is going to hold? Is it the breaker block or the demand zone? Now the confusion starts. So there are ways to identify other blocks, but I really don't use other blocks because it has a lot of, you know, stuffs like the breaker block. There are also some things you have to check out for, like the imbalance, fair value gaps, and the like. So I really don't like going so hard on myself when I can simplify things. Remember, simplicity is key. Keep it simple. Keep it simple. Though some people are doing well with it, I'm not saying it's not good. You understand? But you know, when I have good things like this, now this is a demand zone, right? There is high probability that markets will react from this breaker block and not my demand zone. You understand? So nonetheless, I'm still fine if markets does this and then starts going up. You understand? I already know that, okay, probably it's because of this breaker block over here and then imbalance to 50% of the imbalance, you know, stuff like that. I already know. So then what I'll just do is I'll just follow the trend like that. Once I've gotten another break of structure, definitely I'll get the demand zone again, and then I should get the mitigation on my demand zone, and then I'll look for confluence, confirmation, liquidity, and the likes, and then I'll continue with the trend. You understand? So you can identify other blocks in many ways, many ways. Okay, so I won't be doing that since I really don't trade other block like that. Yeah, let me see. Yeah, let's start with Mr. Ajuru Favor. He's raising up his hand. So unmute yourself and ask your question ASAP because there's no time again. We are waiting for you. Unmute yourself and talk and ask your question. Okay, since it's not answering your question, you can mute your mic back, asking your question, mute your mic back. Then next on the list is Timilein. I'll just give you 30 seconds to unmute yourself and talk. Okay, Mr. Timilein is not talking. Now we have Arman Steven. Unmute yourself and talk if you have a question. Okay, he has lowered his hand. Then Medal Junior. I think Medal Junior has been blinking so hard over here. Do you have any question? Any question?
My question is you said during trading, when trading other blocks, when trading supply and demand,
yeah,
that you have to wait for confirmation and confluence.
Yeah.
Please, can you touch on the confluence aspect? I don't really understand the confluence.
All right.
Thank you.
Yes. Sorry, I didn't tell you the meaning of confluence. I was actually planning on saying that tomorrow. Then I'll be talking about Asian session liquidity, liquidity with support and resistance, and then how to use it as confluence. So what does confluence mean? Confluence means using one or two confirmations to confirm a particular supply and demand zone you want to use. Okay. Now remember at the beginning of this video we talked about Fibonacci. That is one confluence. It means you are trying to confirm that is this supply zone very high probable. You understand? Does it have high probability? Is it a high probability supply zone? So that is confluence. You are trying to add up one or two things or three things to be able to confirm that this supply zone is a high probability supply zone. Over here, I said we're going to look for confluence. So it means we're going to be looking for, is there enough confirmation, like 2 to 3 confirmations over here that will allow us to say, okay, this demand zone is a high probable demand zone. You understand? So that is the meaning of confluence. Using one or two confirmations. Like, remember when I started this video, I started with Fibonacci. So you draw it from the highest points to the lowest points, okay? And then on Fibonacci, we always want to use 0.7, and you can see what happened. Exactly on that 0.7 is where our supply zone is. That is one confluence, okay? That is one confluence. Then another confluence is liquidity, and then Asian session liquidity, which we'll be talking about tomorrow, okay? So most of the time, the confluence is sometimes liquidity, sometimes Fibonacci, and then break of structure, okay? Sometimes some people use imbalance, you understand? Like this is imbalance. I believe everyone knows what imbalance is. Everyone knows what imbalance is when there is abnormal movement in a candle, which is longer than usual. So there's always high probability that markets will always want to trade back into that imbalance before it's taking off. You understand? So same thing here also. There's an abnormal move here. So we believe that market would want to trade back into this imbalance. I can see what's happened. Market traded back into this imbalance, and then using our supply zone as what? As confluence. Okay? As a confirmation supply zone, using the imbalance as confluence to take a sell from here. So that is all about confluence. There's a lot of confluences to take in trades. There's a lot of confluences to take in trade, but I'll be explaining just a few. Then I can see a question here. Someone says, what really move market price? Yes, market makers are the ones that move the markets. You understand? So though some people says liquidity move price, supply and demand move price, this and that move price, fundamentals move price, but nonetheless, actually those are actually correct, because when you look at it now, when you are trading supply and demand, you are like, wow, look at this supply zone. That is what move price, right? The supply zone is what move price, because just look at the supply zone over here and then look at what markets, how markets reacted. Touch the supply zone immediately, our market moved. So some people always say, you know, whichever strategy you are using is what you say moves price. But what I feel is, or what I know is that market makers are the ones that move this price, and they already know where they are adding price to, okay, where they are taking price to. Sometimes they use fundamental events as mechanisms to move price faster, okay? So I like fundamental analysis a lot because they always use it to move price, but faster. You understand? Look at what happened here over here. There was a CHF interest rate decision, and then look at what happened. I think the interest rate decision was negative. You can see here, you can see the spike, okay? So if there was no fundamental analysis, definitely market will still move inside the supply zone, right? But it will be very, very slow. Adding me, there was no fundamental analysis. It will be very, very slow, and then take a lot of days before touching that supply zone. But with price, with fundamentals, the market makers move price fast. So what really move price is actually the decision of the big banks, the market makers, okay? That is what really moves price. So don't always get caught inside. Yeah, so don't always get caught inside arguments, and when people are saying liquidity is what move price, demand and supply is what move price, this and that, just leave them alone. As long as we are not trading from inside the banks, we really can't say what moves price. Okay, some people even say it's algorithms that move price, this and that. Very valid reasons for moving price, but then we really can't say. Okay, but I know that market makers are the ones that move price. Okay, then someone said let's hold on to Google Meet. So simple, doesn't lag even when network is slightly bad. Yeah, that's what I use for my students. I don't think I'm going to stop using Google Meet anytime from now. You will get the recorded video inside the group. I'll drop it in the group. Okay, so no one is raising up their hand right now. Okay, Mr. Favor. Mr. Favor, you can unmute your mic, and then Mr. Timileni, or else we'll call it a night and then we'll meet tomorrow. I'll just wait for 30 seconds. If I don't get any response from two of you, I'll end the meeting and then you get the recording soon. Okay. I don't think I need to edit this video since it's raw like this. I'll just give it to you guys like that. I don't think it needs so much of editing. All right. I think that will be all for now, guys. Thank you for your time. Peace, guys. I'm out.